profit to loss. Few headlines capture investor attention more sharply. For Bloomberry Resorts Corp, 2025 was a quintessential case study in timing risk. On the surface, revenue remained steady, but beneath, rising costs and setbacks led to a sharp reversal, swinging from $2.6 billion profit in 2024 to an equal-sized loss in 2025. EBITDA bore the brunt, falling nearly 39% to $10.2 billion, and margins compressing to levels rarely seen in mature integrated resorts. The story pivots on the diverging fortunes of Bloomberry's two key properties. Solaire Resort North delivered impressive gains, ramping EBITDA by over $2.5 billion as its casino floors, hotels, and restaurants filled with demand. New growth pillars emerged, including Megafinalo, a digital gaming platform banking on long-term customer acquisition. Yet, SR North's success came at a cost. The legacy Solaire Entertainment City operation faltered in its VIP segment, which is highly sensitive to both volume and hold rates. VIP rolling chip volume dropped 37%, with revenues down over half. Even mass tables and slots softened, following an 8.9% decline in visitor count. The timing was unforgiving. Just as the company absorbed full-year costs for SR North and invested heavily in digital expansion, its main earnings engine sputtered. With two new growth drivers, why did the bottom line fall? The answer lies in operating leverage and the cost of ramping up. Payroll, utilities, marketing, these expenses arrived immediately, while revenue growth lagged. Megafinalo alone drove $1.9 billion in expenses in its startup phase. Advertising costs surged, and regulatory uncertainty further clouded the path to steady earnings. Gaming revenue declined 6%, with non-gaming segments climbing, but not enough to offset the rising cost base. Consolidated expenses rose 9.3%, outpacing revenue. With weakened cash earnings and higher spend, operating cash flow was halved, underscoring the financial squeeze. The balance sheet remains intact, but less comfortable. Liquidity ratios slipped, leverage nudged higher, and return metrics turned negative. For investors, 2025 resembled an investment year, a period where multiple cash-absorbing events converged, intensifying cyclical pressures. Looking ahead to 2026, three pivots will shape Bloomberry's return to form: stabilization at Entertainment City, Soon North converting momentum into sustainable margins, and Megafinalo demonstrating healthy unit economics. In sum, 2025 marks a challenging but potentially pivotal year. Bloomberry's strategy to build new engines of growth is intact. The test now is whether these investments translate into a profitable rebound, turning this trough into a platform for recovery.